All right. Well, that one's loading. Well, let's see if that works. All right. This is going to be live in seconds. All right. We're going to turn the camera around so people can read it. People can read it. There we go. There we go. And we're going to go live here. Run normally. We're going to run it normally. Blah, blah, blah. All that kind of nice, neat, fun stuff. 5 cameras, 6 cameras. Holy cow. So we're going to get more cameras eventually. Skip version. Audio input's working. That's working. That's working. Cool. Everything's working. Wonderful. Start streaming. Manage broadcast. We're almost ready. We're getting ready to roll. Okay, give me a couple seconds. Oh, hi to all you people. Hey, 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 hi, hi. Darren, Bob, JJ, Skip. How are you guys all doing tonight? Okay, no, it's not made for bloody children, and it's for entertainment, and we're going to be live any second now. Brian Kooks, how's it going? Alrighty, and we are good to go. Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for that safe, predictable, consistent 1% per week. Hey Michael, it's amazing. One and only truly original James. Woohoo, that's me. Woohoo, woohoo. Yeah, all that kind of yeah. Interesting being me on a daily basis. So as I was saying, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, consistent 1% per week. Now, how do we do that? We use nothing but pre-qualified dividend stocks. Scott Hackler, hi, how are you? David, how's it going there, Mr. David? Wondering whether or not to jump on in? Well, all right, so how do I do that? Well, in 2008, my 9-year-old daughter wanted to learn how to trade. No sound on Instagram. No sound on Instagram. Well, there you go. Hypothetically speaking, that should do it on Instagram. Tra-la-la! Evening from Sweden over there on Instagram. I'm still kind of interested in what that booklet, that manual, the manual you are throwing together. Kind of curious what that looks like. Anyway, so in 2008, my 9-year-old, hey Wildcat Sam, hey James, sorry I missed you last night. Hope all is good. All is always good. And Harrison Reed, WTF. Well, today's friendly. I don't know. Is this guy talking about? All right, Harrison Reed, thank you very much. So as I was saying, in 2008, my 9-year-old daughter wanted to learn how to trade stocks, just like her dad was doing. Unfortunately, still no sound, damn it. I honestly, ooh, wait a second. Oops, what is that? There we go. That's it. I just hit that button. So teaching a 9-year-old how to trade in the stock market had its challenges. So here's the 5 challenges I had to come up with. Holy cow, it blew that one up. Zoomed in. You guys don't want to see me, not that close anyway. So here's the challenge, trying to teach a 9-year-old. Anyone possibly able to bless me with a small meal tonight? I'm homeless and tent roof. Okay, wow, go Dallas Cowboys. Still no sound on Instagram. Well, I just changed the microphone settings, so that should do it. Okay, back to what I was talking about. 9-year-old trying to teach her how to trade. All right, so we're having an issue over on Instagram. Well, let's take a gander at this. Testing, 1, 2, 3, 7, 12. Yes, no, maybe. That working? Your residents over on Instagram. Oh, by the way, can somebody check and see if this on YouTube is up and running properly? It's still no sound, huh? Really? The only thing I can do is turn it off and then turn it back on again. That mutes it, that turns it back on. I'm not 100% sure quite how to do that on Instagram. Sorry. Albert, how many times are you going to ask me about Tesla? How many times am I going to say no to you about Tesla? Albert, we'll take a look at Disney. All right. But let me finish first with the disclaimers and how it all started. Okay. First of all, I'm basically a nobody. Okay. I'm not an accountant. I'm not a bookkeeper. I'm not a stockbroker. I'm not anything in particular. I'm not a money management. I'm not a financial advisor. YouTube is working. Thanks, Scott. What do I think about Apple? We'll take a look at Apple. Just hold tight there, Tyrese. Okay, just going to hold there for a second. So, when I say something here online, I am relying on you to go do your own research. Now, just because I have AT&T pulled up here on the screen doesn't mean I'm suggesting you to buy AT&T. In fact, I don't make any recommendations whatsoever. No recommendations at all. Okay? So if you guys want to take a look at something, I'll be more than glad to take a look at it, give you my humble opinion. What I actually do here is I show you how I trade, a trading strategy I created for a 9-year-old little girl back in 2008. It had to be simple. It had to be safe, predictable, consistent, and no way that she could lose. So those 5 little parameters that I needed to leap on over in order to get her to trade alongside with me. It was kind of fun while it lasted. Okay, so that's the 5 parameters. It had to be simple, safe, predictable, consistent, no way to lose. Wonderful. Now, I had come up with a few simple rules. Rule number 1, and this is always the big one. You guys can never ever forget rule number 1. Never buy something you do not want to hold on to long term because you just might have to. Rule number 2, never sell at a loss. It's kind of against the point of the whole game. Rule number 3, make sure the company has consistent increased dividends. It is the quickest, simplest, easiest way to find out whether or not it's a good company. A dividend is nothing more than the profits they share with the investors. And if they continuously increase those profits that they share with the investors, more than likely, they're consistently profitable. So I like 20 years of increased dividends. Okay? Rule number 4, weekly options. When I say I want weekly cash flow, dividend, the name of the group here, or the name of this, what do you call it, the show, or the live, and whatever you want to call it, what we're doing here, I have no clue what you want to call it, other than turn the cameras on and go. Other than that, dividend investing for weekly cash flow. I cannot do that unless the company has weekly options available. A lot of companies you will see have monthly options. Some have no options whatsoever. I am not interested in wasting my personal time taking a look at them. Now, I have nothing against them. They could be the greatest people on the planet. But we're talking about my personal money, your personal money. Where you decide to put your money is totally up to you. But for me, I only invest in companies that are consistently profitable. The only way I can figure that out is how consistently do they increase their dividends to their shareholders. Rule number 5, make sure the numbers work. Now, that sounds a little confusing because a lot of people have no idea what I mean by make sure the numbers work. Well, if we're looking here, before I start crunching some numbers and whatnot, there's a reason why I have this screen behind me live on YouTube. All right, so you can sit on your big screen in your living room or your bedroom, wherever you have your big screen TV, and you actually see this screen behind me on a live YouTube channel. That way you can follow along and you can see the little tiny numbers a lot easier on a big screen or a laptop or a computer. It's really not easy to see it on a what do you call that? On a phone, mobile app, or even one of those iPads. Okay, scrunching in really deep to see those numbers is can be real challenging. All right, that's why this is live on YouTube, and besides, it gets to be recorded from now until eternity, until whenever they decide to turn it off. So I have videos go all the way back 10, 15 years. So yeah, Facebook, I'm not too fond of them. They only hold the videos for 30 days. Instagram, I'm not quite sure of yet. I'll have to do a little bit more research on the other social media sites. But other than that, Let's get working. All right. So in order to find the companies that are consistently increasing with their dividends and have 20 years worth of increased, 20 years increased dividends and weekly option. Sorry, I've been doing this every single night for the past almost 6 months. We're going to month 7 now, which is Monday is going to be week number 31 for the year. 31 for the year. There's only 52 weeks in the year. We're already coming up to week number 31 come Monday. All right, fine, is what it is. Alrighty, that being said, in order to find those stocks, here's the best way to find them. Go to Google, go to any search engine, Google, Bing, Alta Vista, whatever, AOL, whatever you guys use. Okay. In the search engine, you want to look under Dividend Kings List 2024, Dividend Aristocrats List 2024, Dividend Champions List 2024, and the Dividend Contenders List 2024. Now, those 4 lists right there will give you over 300 companies. Now, just for the fun of it, let's throw in Warren Buffett's list 2024. Just to round it off, you have 5 lists to look at. You can see a lot of 5s. I like 5 for some strange reason. No honey in my water tonight. I got to do something about that throat. It hurts. All right, we're going to jump in and just dive in and take a look at what you guys want to look at. First thing you want to look at is Disney. Fine, wonderful. Let's take a look at Disney. All right, first thing I always want to see is the 1-year chart. Now, first thing I want to look at is always, what's the high, what's the low, where was it, where is it, which direction is it going? That's 5 things I want to look at. The high, low, where was it, where is it, where it's going. You know, those kind of things. Still working on these videos. I'm going to have a shit ton of videos on this other channel. And we're ready to go yet again. All right, so now we know what the bid is and what the ask is. All right, if I can buy it at 89.82, take a look at the number right up there, the bid and the ask. This is the option chain. Now, if you guys don't know anything about options, there's call options, there's put options. I'm not going to deal at all with the put options. They get a little confusing. So remember what I said, the 5 criteria, it had to be simple, safe, predictable. Yeah. So this is the simplest I could possibly make this. All right. First thing, let's go to first thing. All right. Let's get rid of all this, and we'll go to the absolute first thing. Because first thing is first, right? First is first. All right, we'll leave that one up there like that. So this is a calendar for 2024, July 2024. See all these little green dots? All these little green dots represents a dividend EX date for certain companies. Let me rattle some of them off for you. Comcast, American Express, Bristol Myers Squibb, Cisco, JP Morgan, NTAP, and Cisco. There's actually 2 Ciscos, believe it or not. MasterCard, The Gap, AT&T, Verizon, Oracle, General Electric, Marvel, Procter & Gamble, Colgate-Palmolive, ZTS, EOG, FCX, Abbott Labs, Apache, Bank Mellon, Caterpillar, Nokia, so on and so forth, all these companies. There's 4 dates you need to remember when we're investing with dividend stocks. Okay, date number 1 is the announcement date, right here, see it? Announcement date. Second date, EX dividend date. That's the last day the stock trades before the dividend is actually paid. The next is the date of record. Whoever owns the stock on the date of record is the individual that is entitled to collect the dividend. Chuhan Sabah. I hope I pronounced that correct. You want to be invited onto the live show? I would first prefer you to send me your name and a number where I can actually have a conversation with you, because I don't invite anyone onto the live show unless I've had that conversation, because I kind of want to know where your stand is. I don't want to talk about politics, don't want to talk about religion, don't want to talk about anything but investing in dividend stocks for weekly cash flow. So if you really want to be on the live with me, fine, send me a DM with your number. I'll give you a call If you fit, yeah, I'll invite you back for another day. First thing you want to do is go through all those 5 lists: the Dividend Kings, the Aristocrats, the Champions, the Contenders, and Warren Buffett list. Those 5 lists. You want to take all the companies that you actually like. Now, I have about 300 in my personal list. I put them in a calendar when they pay their dividend date. Now, why do I do that? Well, because I have found over the years of investing that stocks have a tendency to go up just before the EX date. These are the EX date, all these little green dots. Okay, if I click right here, this is Lowe's on the 24th. All right, which was Wednesday. So if I wanted to buy Lowe's, I would have bought it 2 weeks ahead of time, okay, on a Monday, which would have been an 8th. So I would have looked at Lowe's on the 8th of July. Does it meet my parameters? It has their dividend coming up. Great. Stocks have a tendency to go up just before the dividend date. Let's kind of see if it actually did. So from the July 8th to the 24th. LOW. I don't know about you, but what do you think? Here's July 8th. Okay, remember what I told you over here? If I want to do Lowe's, I want to do it 2 weeks before the EX date. The EX date's on the 24th, 2 weeks prior to, on a Monday. Monday is right here, the 8th of July. Stock went up, 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 up. Does it usually do that? Yep, usually does. So I like to buy the stocks 2 weeks before the EX date, jump in, buy it at the market, which at this moment in time would have been $2.15. So at the $2.15, I would have sold somebody the rights to buy that $2.15 from me for whatever price it was at that moment in time, and then I would have collected the premium. I'm not looking for the dividend, not looking for that. I'm not looking for the cash run-up from the 2 weeks prior to, on the Monday, to whatever the high is. I'm not looking for that either. What I'm looking for is the premium. What do I mean by the premium? Well, right at this moment in time, Lowe's is at $2.39. So the $2.40, as you can see, is the closest strike price, $240. That's the closest strike price for Lowe's. Now, the closest strike price is selling for $2.87. Well, we all know a little bit of math. $2.87 is more than 1% of 239. So I would have made my money on Lowe's had I done that one, but I didn't for some strange reason, whatever the reason was. That being said, let's go back to, So anytime I take all the stocks that I like, and there's about 300 of them, I put them into the calendar. Now remember, there's 4 quarters, and most companies pay every 90 days, which is every quarter. If you take a look at Comcast right up here, it is the 3rd of July. Now July happens to be the beginning of the 3rd quarter. So you have January, February, March, 1st quarter. April, May, June, 2nd quarter. July, August, September, 3rd quarter. October, November, December, 4th quarter. So look where Comcast is. Comcast is in the first week of the first month of the 3rd quarter. I know it sounds confusing, but it's also known as week number 27. Okay? That is week number 27. Okay? So the first quarter's got 13 weeks, 2nd quarter got 13 weeks, 3rd quarter's got 13 weeks. We are currently in week number 4 for the 3rd quarter, also known as week number 30. Monday, the 29th, starts week number 31 for the year, or week number 5 for the quarter, or week number 5 for the first month of the 3rd quarter. However you want to look at it, it's still week number 31 that's coming up. That's what we're looking at. All right. I'm looking for the premium. I'm not looking for the dividend. I'm not looking for the stock run up value. I'm not looking for the value to go up higher. Buy the stock, wait for it to go up. I'm not looking for that. I'm looking for safe, consistent, predictable, slow, boring movements. That's what I'm looking for. All right. So let's take a look at Disney, because somebody wants to look at Disney first. D-S. First thing I want to see is the 89.82, which would be the 90 and the $90 strike price. Check it out. The $90 strike price, which is the closest one at this moment in time, is going for 114. That is well over 1%, and that's exactly what I'm looking for. Over 1% on a trade. Disney, I like Disney. Okay, they may be doing some messed up stuff lately, but does it really change the fact that they're almost 100 years old and they're an icon in and of themselves? Yeah, they'll get the mess figured out and they'll get back on track again. I don't see Disney going anywhere anytime soon. But let's take a look at the numbers. When I say rule number 5, make sure the numbers work. I'm not just talking about what I can buy it for, what I can sell it for, and what I'm collecting. Okay, I'm not talking about just that. I'm also talking about the numbers on the chart. Where's the high? Where's the low? Where was it a year ago? Where is it today? That's what I'm talking about. Okay, what is the chart telling me? Well, at this moment in time, it's telling me the bottom's way down here at 79, the top's way up here at 124. Okay, but we're at 89, almost 90 at the moment. Well, great. What's the last 90 days look like? Okay, this is the last 3 months. Okay, what does it look like to you? Slow turn to the downside. Now, look at right here, the last week, the last couple of days. This is what I'm finding most important. Why? Because I want to be in for 5 days and 5 days only. I want to jump in on Monday and I want to be out on Friday, ideally. Now, by looking at the chart, you have a good idea what when I say we, I mean me and you, because we are the buyers, we are the sellers. Another video. They keep popping up, don't they? Yeah, Neil, you're right. Right there, and there we go. So as we see it's slowly going down, I want to take a look at the last 30 days, because the last 30 days is giving me a good indication. Okay, having a good indication of where she's going to be in the next 5 days. Well, what do you think? Take a look. What are the numbers telling you? Well, basically telling me that 30 days ago we're at 101. Okay? 3 days later, we're at the 30-day high, 102.58. All right, basically goes sideways for a little bit, and then the last couple of weeks, she's just dropped. And look at this. Thursday is the new 30-day bottom. Is it the actual bottom? We don't know yet. But it bottomed out at 89.21. Right here, 89.21. Well, Friday was an up day. Okay, I personally like 2 up days in a row to isolate a 30-day bottom, because you just, because you just don't know. Right? You just don't know about a 30-day bottom. So by 10, Neil, I have no idea what that means. We see. All right, I have no idea what that means, Neil. It is what it is. So this is what I like. I would like one more day to the upside, just to isolate whether or not that is a 30-day bottom or not. Now, I like Disney so much that I'm actually going to write it down for list for Monday. D-I-S. All right, so we got a couple of good ones for Monday. All right, Apple is next. A-A-P-L. Oh, before we do that, let's take a look at the seasonality. Get an idea what Disney usually does this time of year. Don't look like much. See it way up there? Used to go sideways. And Comcast. We'll take a look at Comcast. Just give me a few minutes. Looks like she can go sideways for about a week and dip down a little bit after about a week. Well, Let's take a look. Let's go back to where we were. Move this back over here. And we'll put in Apple. Interesting. Okay. Always first thing. High, low, was, is, direction. Okay, cool. Next, pricing. What am I buying it for? 217.93, that's 218. Closest one is going to be the 217.50s for 5.25, or the 220s at 4. Here's where you have to do a balancing act. Which would you prefer? The 217.93, that's the purchase price. That's where you're jumping on the merry-go-round. Remember, that's all this is a merry-go-round. Same stocks, over and over and over again. So Apple's at 117.93. Let's call it 118. 27.50. Neil, I'm going to agree with you. I'd go with the 217.50 also, because it's a safer bet. Because at this moment in time, the stock is already above 217.50. At the 220, the stock has to go up. Well, what's the probability of the stock going up? Well, it probably will go up. Let's take a look at the numbers, because both the 217 and the 220. Hey, person, how you doing? Both the 217.50 and the 220 are both over 1%. So you got to ask yourself the question: do I want the 217.50 or do I want the 220? Okay. Now, when you're doing both of them, each one is going to have a different rate of return, and we're going to take a look at those, and then we're going to look at which is the safer bet, because it always comes down to the numbers. Before we do that, let's take a look at the chart. And as always, first thing I want to see in the chart: the high, the low, where was it, where is it, all that kind of nice, neat, fun stuff. All right, so tomorrow I have to push everything back a little bit because I want to see a little bit more of the screen. We'll have to worry about that tomorrow. It is what it is. All right. First thing, a year ago, we were at 194. We bottomed out in the middle of April at 163.92. Topped out at 237.16. No, 237.23 on the 16th. All right. Nice movement. Last 30 days. Okay, 30 days ago we opened up at 211.50. 2 days later, we're at the 30-day bottom at 210.30. From there, it takes about 2.5 weeks to get to our 30-day high, 237.23, and then from there, she just drops down to right around 215. All right, 214.62, 215, same thing. 1 day to the upside, awesome. I'm writing Apple down because Apple is a happy stock. Hold on a second. Okay. Now, Apple, we all know, let's take a quick look at the seasonality. Once you take a look at it, you're going to have a big smile. Trust me on this one. Take a look at Apple for the seasonality. Okay? For those of you who don't know what seasonality is, this chart here that we're looking at, all the way to the left, is January 1st. All the way to the right, December 31st. That is one whole year. But here's the kicker. The blue line represents the movements for this year. Okay, fine. The red line represents the movement over the last 10-year average. Look at it. From January 1st to December 31st, it's always a nice upward trend for Apple. No downs, no lows, no ifs, ands, or buts. Just a steady, slow increase from January all the way through to December. So that's kind of like a no-brainer with Apple. Where's it going? Well, it's going up. How do you say that? Because it usually always goes up. All right, so here's a high of the year, 237. A little bit of pullback to 217. Great. We have 1 day to the upside. That makes me happy camper. So what we're going to look at now. Party Springs, how you doing? So what I'm going to look at now is I'm going to look at both trades. I'm going to look at the 217.50 and I'm going to look at the 220. And then we're going to decide which one is a better trade. Now, I'm going to let you know right ahead of time which one is the safer trade. The safer trade is where the stock doesn't have to move at all, the 217.50, because right now it's at 217.93. So if the stock goes up, I make the money. Stock stays the exact same, doesn't go anywhere at all, I still make the money. The stock can even come down a little bit, and I'm still making the money. So let's look at the 220. The 220, yeah, I'm making a little bit more than 1%, but if the stock has to move up in order for me to be back into cash. Okay, it's not always that good. If the stock stays the exact same, still, stock has to go up to get the cash. If stock comes down, still no. This is why I like doing there's a difference between in the money, at the money, and out of the money. So let's quickly take a look. It's at 17.93. So at the money would be 218 because that's kind of like the closest round number to it. All right. In the money would be the first strike in the money, 17.50, 217.50. That's in the money because it's already there. The 220 is one strike out of the money. And then the 222.50, that's two strikes out of money. Each one of these numbers right here are called strikes. Those are certain prices you can sell for. And this one just so happens to be in $2.50 increments. Okay, sometimes you'll see some stocks at a 50-cent increment, some at $1, some at $5, some at $2.50, some at $10. It all depends on the price. Okay, this one right here is $2.50 increments. The closest one is going to be the 217.50. So let's take a look and find out what those numbers are exactly. For that, I'm going to use my trusty calculator. Here we go. Trusty calculator. First I want to do is I want to change it to a covered stock because I want to buy the stock and sell the option at the same time. Let's get rid of the chart because we already know what that is. We're looking at the 217.50. There it is right there. Now I'm going to use, I'm going to just do 100 shares. That way you guys don't get too intimidated by the bigger numbers. At 100 shares, whoops. Okay, it's a double order. I'm actually buying the stocks right here. See, buying the stocks, Apple, okay, at the market price. I am also selling one contract at the 217.50, the call option at the market. Okay, hit the click and send. This is the order right here. Now I always tell people, hold that thought. Get that video going again. Come on. Okay, now, when I'm telling people, always read the order out loud because your eyes can deceive you. When I say read it out loud, it should sound something like this. Buy one covered call for apples, 100. Those are the weeklies. To August 24. That means it's going to expire on the 2nd of August, which is next Friday. The $217.50 call option against Apple stock to open to open. Why does it say to open to open? Well, anytime you do any kind of trading whatsoever, you have to open an order first, and then you have to close the order. So when you're buying a stock for the first time, well, you're opening an order to buy a stock. Eventually, at some point, you will sell that stock, and then you will sell it to close that order. There's an opening order, and there's a closing order. So this one in particular says to open because we have two trades that we're doing. We're opening a stock trade where we're buying 100 shares of Apple, and then we are opening an option order. We are selling a covered call, which is a call option against Apple, the position we just paid for. That gives me the premium of right here. So the first one, the first line, the green line, is is the order itself. The second one is the break-even point, 212.60. Well, the stock's at 217. If my break-even is 212, it can come down quite a bit, and that'd still be good to go. The maximum I'm going to make off of this trade, my maximum profit, $489.50. $489.50. There we go. Now, what is it costing me? Well, it's costing me $21,260.50 plus 65-cent commission. Comes to a total of, I divide that by 21,261 and 15 cents. So that will give me a rate of return of 2.3%. Now, I like Apple, 2.3%. I'm going to write that down real quick, 2.3%. 2.3 at 217.50. That's Apple. All right. Now, let's do the 220. Now, remember, we know what kind of a... Let's get out of that one. Get out of there. Get out of there. Now, I want to do the 220. Same thing. Oops. At the market. Do 100 shares. So you guys, so we're comparing Apple. That's funny. We're comparing apples to apples on Apple. All right, funny. All right. Confirm. You see it doing the exact same thing. All right, I'm buying 100 shares. I'm selling one contract. The 220s this time on Apple. Okay, here's the order. Buy one covered call of Apple. Right here, that green line right there. Buy one covered call of Apple 100s. Those are the weeklies. To August 24th. That's this coming Friday. Okay, the 220 call and buying the stock to open. Again, we're opening a stock order and we're opening an option order at the same time. Okay, my break even 213. Okay, maximum profit $617. Let's break out that calculator again. Okay, $617. How much is it costing me? Well, it's costing me almost the exact same amount of money. Divide that by $21,383.65. That gives me a grand total of 2.88%. All right. So the 220, 2.88%, and the 217.50, 2.3%. So here's where you have to ask yourself the question. Which one is a safer bet? Which one will get me in and out quicker, but least risk? Okay, now, like I said, where it is right now, take a look. It's at 217.96. All right, that's where the stock is at this moment. But when he opens up on Monday, going by the numbers up here, 217.93 we're looking at. So if the stock goes up on the 217.50, well, we're still making our 2.3%, but it's a safer bet because the stock doesn't have to move at all because it's already above the strike price of 217.50. Granted, you're only making boo-hoo 2.3% as opposed to 2.88%. Is it really worth the aggravation? I mean, ask yourself the question. The 220, yeah, I'm getting a 0.5% more. Okay, fine. It adds up at the end of the year, that 0.5%. Really, it does. Because that 0.5% every week is 26% per year. That's a big chunk to walk away from. But here's the thing. The stock has to move up. It's at 217.96 at the moment. Okay, so it has to go up. What is that? $2.04? Has to. Anyway, there's a difference. That's where your own personal preference is going to come in handy. Now you can do the same thing with the 215. Okay, do the exact same thing with the 215. It's an even safer bet. You're getting a less return. But here's the thing. Come Friday, if I do this trade on Monday, come Friday, I will more likely to be back into cash to do something else the following Monday. It all depends on what it is you want to do. And that's a question that only you can answer. We got 81 questions, so let's take a look at some of them. How could I miss all those? All right. Anything. Tesla. All right, Albert. Tesla's a no. Disney we already looked at. Apple we looked at. YouTube's working. Disney will go up based on Deadpool probably. M.O. Altria. Altria. M.O. Chevrolet, how are you doing? Albert, you lost 500 bucks. Sorry about that. But I will win more. Well, cool beans. Instagram is working. Good. SMCI, really? Why would I want to look at SMCI? Let's look at Altria first. Okay, Altria is going to be a no. Only reason. Now, don't get me wrong. I'm only saying Altria is a no this week. I love Altria. I really do. Okay, but look at where the stock is at the moment. Okay, the stock is at a 30. It's at a 1-year high. This is the highest it's been all year. I do not play that game. Okay, buy it high and wait for it to go higher. No, I don't do that. I don't jump on that bandwagon. I prefer to be down here. Okay, after it comes off of the 30-day top, bottoms out. Bottoms out right here. 2 days to the upside. I would be jumping in right here on the 2nd of July, and then riding that thing up. No, I don't do the high thing. Sorry. SMCI. I have no idea why we're looking at SMCI. It's always been a no every time I've seen it. Okay, Supermicron computer, $712. Yeah, that's just a waste of my time only because it's out of my price range. But if you like it, you're looking at the 712s. The 71250s are going for 26 bucks. So $26.20 divided by 712 comes to a grand total of 3.6%. Holy cow. But that's a game that I can't play because it's out of my price. Okay, however much money you think I got, I don't. Okay, I like to buy stocks under 250. Okay, there's still 300 companies under 250. Anyway, SMCI is just out of my price range. Sorry about that. Jerry Beard, will Walgreens ever go back up? Well, Jerry, here's the thing with Walgreens, WBA. Okay. We know why she's down where she is, okay? We know why she's down here. Here's the 30-day bottom 2 weeks ago. Okay, she bounces up, a little bit of pullback, she's going back up again. Great. I love Walgreens. You gotta make your money when you buy low and you sell high, and you can't get any lower than a 7-year bottom. That's what it is, 7-year bottom. So when I say buy low, sell high, you should be looking at stuff like this, which sinks and sinks and sinks. And finally, at some point in time, you reach the bottom, because the price at this moment in time is $11.82. Just for the fun of it, before we move on any further, let's see exactly WBA. We're going to look for statistics. Under statistics, it's going to tell us exactly what the book value is for Walgreens. So take a look. $15.80 a share. $15.80 a share. Now, the book value, if you didn't know, if you take everything that Walgreens owns, the real estate, the buildings, the machinery, the cash registers, the chairs, the shelving, everything they own, and you liquidate it, that's the value you're going to get. $15.80. So you go to the bookkeeper, and the bookkeeper says, hey, what's the difference between all the assets and all the liabilities? What's the bottom line? Here, the bottom line is $15.80 a share. So if I could buy a 100-year-old company that has a store in every major city in the United States for less money than the book value, well, damn sure I'm going to buy some of it. As soon as it made this drop right here, see it? As soon as it made that drop, well, of course I jumped in. Because she went from 16, which is right around where the book value is, down to 12. And then it continued to drop down to below 10, below 11, 1065. That's crazy. The company's worth 15, whatever, 15 and change. So the question is not why am I buying it? The question should be why aren't you buying it? So here's let's take a look at the numbers. So we already know that this bottom right here on the 9th of July, see it right there? That, my friends, is the low of a 7-year period. It hasn't seen this number in 7 years. You want to make money in the stock market, buy low, sell high. Well, there you go. You can't get any lower than a 7-year low. Now, a couple of people in the audience have asked, James, why are you buying that? Why are you looking at it? It keeps dropping and dropping and dropping. Well, of course it's going to continue to drop. Until the current administration changes their views on theft, hey, if you can steal $900 worth of stuff, walk in the store, take $900 worth of stuff, walk on out, and they're not going to prosecute, well, why the hell won't people keep doing it? That's exactly what people are doing. Okay, and they're doing it in the rough and tumble neighborhoods. Well, a lot of them, Walgreens is going to go under because corporate said there's 8,700 stores. We're cutting out 25%, getting rid of all the bleeders. Fine. That's not going to be a day or two, a month or two, or a year or two. That's going to take some time. Okay, well, how long did it take the Exxon to recover from the Exxon Valdez debacle? How long did it take British Petroleum to recover from the leak in the Gulf? Certain companies have these huge, devastating things go wrong. 3M had a huge lawsuit that they had to pay out this year. Apple, billion-dollar lawsuit that it had to pay out, and the stocks just recover. Well, the same thing's going to happen with Walgreens. Eventually, you get rid of the dead weight. If the store's not producing, not being profitable, fine, you get rid of it. Okay, so how long is that going to take? I don't know. But apparently, this right here on the 9th of July is the bottom of a 7-year period. Could that be? Could it keep going down next week? Well, of course it can. But at this moment in time, this is the bottom for the 30 days. And yeah, I took advantage of it. I jumped in and I bought some because I'm thinking it's going to go to the upside. Well, alrighty then. Let's keep on moving forward. We got a bunch more questions here. All right. Look at all these questions, guys. Questions. Here we go. Love the awareness of trading. Okay. Not quite sure what you mean. $100 a day at school. Okay, good for you. QCOM looks good, huh? We'll take a gander at QCOM. Hold on a second. What trading platform are you on? That is Think or Swim. Manny, thanks for that. Apple is margined at 30%, so you hypothetically are risking around $6,000 for a nice return. Alrighty then, thank you for that. I was just showing you what a cash rate of return would be. A margin rate of return would be even crazier. Let's take a quick, okay, so Walgreens, I love Walgreens, I do. I didn't go over the numbers though, did I? So if I buy it on Monday, I'm paying $11.83. And if I sell the 12s, I'm getting 18 cents. 18 cents is 1.5% return as long as she stays above 12. Well, it's at $11.83. What are you, 17 cents off at 12? Do you think it can move up 17 cents in a week? Well, maybe it could. What if you buy the 220s and it doesn't climb? Well, Larry, that's why I went through that exercise. Remember, the 220 is giving you 2.88%. But the 217.50s are only giving you 2.3%, right? Yeah, 2.3%. You're getting an extra getting an extra 0.5% with the 220s. But remember, the stock has to move up, has to go up. Apple usually moves up anyway, so it's not a big issue. But the less risk trade is the 217 or the 215. The less risk, but then again, a less reward. I'm only looking for 1%, so more than likely, I would do the 215s or the 217s. Personally, that's me. Okay, it is marked for me to take a look at it Monday, so we'll take a look on Monday, see what happens. But anyway, let's look at Walgreens. We're looking at Walgreens at the moment. Okay, 1183. The 12s are going for 18, which is 1.5%. And what does the stock have to do? It needs to go up 8 cents or 18 cents. Big deal. All right, let's keep going some more. Then we're going to go look at QCOM. Coffee Break Logistics. How are you doing? Ram, you really want me to look at DXCM? I've never heard of it. DXCM. More than likely, it's going to be a no. And, ooh, look at that. It does have weeklies. Okay. So it has weekly options. But before we say anything about that, let's go check out Yahoo and see how consistently they increase their dividends. Adam, you want to look at American Airlines? We'll take a look at that in a little bit. Hold up. DXCM. DXCM. Historical data. We want to look at dividends only. Oh, come on, Ram. When I say I want to look at companies that have weekly options and 20 years of increased dividends, at least make sure the company has dividends in the first place. Okay, because there's 9,598 companies I can choose from on a daily basis. Why would I want to look at a company that doesn't share their profits? Okay, so DXCM is a no. That's a no. Sorry, that's a no. What did you want to look at? AAL, American Airlines. All right, American Airlines. Interesting. 1059. High, low, where was it? Where is it? The chart, look at the last 30 to 90 days. Cool beans. A year ago, 1690. The bottom was just recently, 977. 90 days ago, 13, topped off at 1537. All right, Joe, I told you I'm going to get to QCOM. Just hold tight. If he does 220, the stock has to go up in order to be called away. Great, you're right, 86. Thank you for that. Now, how about DXCM? Dude, Ram, DXCMs are going to be a no. Please, stop asking about it. Amar is watching over there on Facebook land. How you doing over there in Facebook land, dude? Pleasure to have you. All right, so AAL. Take a look at that. Last 30 days. Now, 30 days I find to be the most important. Reason being, it gives me an idea of where the stock is moving to next. And why is that important? Well, if we know where the stock is moving to next, it gives us a good opportunity to jump in and make our profits. So, American Airlines, take a look. 30 days ago, okay, we're at 1108. 4 days later was the 30-day high, 1141. From there, she drops, pulls back, drops, pulls back. Our 30-day bottom was Thursday, 975. Wow, 975. Look at that. The 1050s are going for 29 cents. The current price is 10.59. Take 9 cents off of that, you got working with 19 cents on a 250 stock. Sorry, on a $10 stock. Yeah, that's over 1%. Now we have 2 days to the upside. Great. I'm going to write American Airlines down for Monday. AAL. Gotta love that one. All right, so QCOM. Joe wants to take a look at QCOM. So I like American Airlines. You got to ask yourself a question. Remember, just because the charts look good and the numbers look good, sweet, you like that, Adam? Just because it's not a recommendation. I'm just reading to you the way I'm interpreting the charts. I'm looking at the 1-year chart. Let's go back really quick. I'm looking at the 1-year chart, okay? I'm showing you where the high of the year is. You can't argue with that. Okay, I'm showing that it bottomed out at 1085, shot back up to 1609. Okay, made a big drop here on the 29th and just kept on going down, down, down until it finally hit a bottom of the year. This is the bottom of the year. Ladies and gentlemen, do you know that if you're going to buy in a stock market to make money, you buy low and you sell high? Adam, I like it as well, not looking for recommendations, only a second opinion, my friend. Adam, you're welcome. So when I say you make money in stock market by buying low and selling high, well, if American Airlines hits the low of the year, we're talking low of the year, okay, 365 days, and that just so happens to be last Thursday. That's the low of the year. Well, look what happened on Friday. She jumps up. She could continue to go up, but look at the size of the move on Thursday and on Friday. Well, we could have profit taking. We could. I don't know, because if the bottom's here, 975, now it's up at 960 and almost hit 1075 on Friday. Okay, that's a dollar move. A dollar move on a $10 stock is a 10% move. Look at the numbers. Just because it's only a dollar doesn't mean that it doesn't mean that much. Well, it means a lot when it's a $10 stock. A dollar on a $10 stock is a 10% move. Okay, in a day. I love to see a 10% move in a day. All right, anyway, that's American Airlines. We're going to jump over. I also look at the volumes. Okay, I understand that, Adam. That's a good thing to look at also. QCOM. Somebody over here, Mr. Joe, is very adamant of looking at QCOM. Joe, hope you don't disappoint me. Now, QCOM is on my list, so I really can't give you that much of a hard time about it because I do like QCOM. It just depends on the numbers. First thing I want to see, high, low, where was it, where is it, what direction is it going? Fine, where are we at? We're at $80.40. So the $80, you got to be kidding me. Is that right? The 180 is at 755? I want to do some math on this one. Hold on a second. Get out my trusty calculator. Okay, so my profit on the 80 is 755. Now, if I buy it at 180 and 40 cents, I'm losing 40 cents right at the top. So that 40 cents is going to come out of my profit. So subtract the 0.4. I'm walking away with $7.15 profit for buying it at a certain price and selling it to someone for that same price. So if I buy it at 180, selling at 180, someone's giving me $7.15 per share. I'm going to divide that out, 180, and that's going to come to a grand total of okay, yeah, I'm writing this one down. Hold on a second. QCOM. All right. Just because that looks good, let's take a look at the numbers. Yeah, Joe, okay, whatever. So that's 3.97%. But, Joe, let's take a look at the chart and see what the chart is telling us. Okay, so let's move this out of the way so we can get a good look at this chart. A year ago, we're at 125.65. Okay, we bottomed out the end of October at 104.60. Okay, now, since the end of May, we're at 204. 6/18, which is the 18th of June, we had a high of 230.63. It's easy to see the movements here. She drops, goes back up. Drops, goes back up, gaps down, keeps on dropping. A little bit of a retrace, and we have our bottom. Is that the bottom of the year? Hold on a second. No, it's not the bottom of the year. It's the bottom of a 90-day period. All right, so we're at our 90-day bottom. All right, fine. 30-day bottom. 30 days ago, we opened up at 196.87. If it opens up on Monday, it's a buy, assuming the numbers work. Well, Joe, we already looked at the numbers. The numbers do work. And yeah, you're right. If it opens up higher on Monday, it's going to be a buy. For me, you guys out there in the audience, you have to make up your own decision. Okay, so I've got 30 days ago at 196.87. Great. A little while longer, on the 16th of July was the 30-day high. Now, you know what happens on a 30-day high? You're going to have profit taking. Well, profit taking took us from 211 all the way down to 175. Okay? So our bottom here on Thursday, 173.27, and then Friday she moved up. Well, this is a bottom for a 90-day period. Could that be an indicator to jump on in? Well, I'm looking at it that way, but that's me. You guys have got to figure out what works best for you. It's not a recommendation. I'm just going through the numbers. Now, last thing I want to look at in QCOM is, what does it normally do this time of year? Well, there's your seasonality chart. A year ago, okay, January 1st, December 31st. The blue line represents the movement so far this year. She moved up, she pulled back, and now as you see that blue line right there, she's turning and going back to the upside. Well, great. That's what I want. That's what I'm looking for. But look at the red line. Look at where we are. Okay, for the next 2 weeks, that thing looks like a flat line. That baby's flatlining. Great. It's not moving at all. Wonderful. I like that for covered calls and spreads. So it does work for me. Okay, I'm not telling you it is a buy signal. I'm not telling you to buy it. I'm not telling you anything. I'm just reading the numbers the way I see them. Okay, so I am going to be looking at it first thing Monday morning. All right, so that's QCOM. Thank you, Mr. Joe Sullivan over there in Instagram land. Manny just sent me a rose. Thank you, Manny. That was very nice of you. What stock are we currently showing? We are showing QCOM. All right, Sheila, I like Mara next week. Okay, let's take a look at Mara. I like Mara, don't get me wrong. Marathon, M-A-R-A. Interesting. First thing I always want to see is the numbers. The highs up here, the lows down here. It was there, now it's over here. Great. Now let's take a look at what am I buying it for. $21.69. Check out the ask price. $21.69, and the closest one will be the 21.50s. Now you got to be kidding me. 21.50 at $1.40? Nice. And look at the 22s, 129. The 22.50s, 111. The 23s, 96. The 23.50s, 77. The 24s, 70. Every single one of those is over 1%. Dennis Mancini. How are you doing there, Dennis Mancini? All right. Yeah, I like Marathon. The numbers look great. Now, we have traded Marathon in the past, but it's all going to come down to what is the chart telling me. Okay, great. A year ago, we were at 1677, bottomed out in October at 704, topped out at the end of February at, 27. Now look at the last 90 days. Look at all the drops, retrace, drop, retrace, drop, retrace, drop, retrace, drop, retrace. I love the movement. I do. Give me a second. Working on this video. And there we go. So as I'm looking at the 90-day chart, okay, I'm looking for patterns, repeatable patterns. Up, down, up, down, up, down, up, down, up, down, up, down. Also, that's not the only pattern I'm looking at. I'm looking at the distance between the high and the low and the high and the low and the high. It looks like it's a week and a half between each movement. Great. That gives me an idea of what me and you, the buyers and sellers, are thinking. So when I look at the last 30 days, right here, okay, I can clearly see 1973 30 days ago. She went up, she pulled back. She went up, she pulled back. Now she's going back to the upside. Okay, we get 1 day of the upside already from this bottom here at, was it 1975, something like that? 1 day of the upside. I'm looking for another up day for Mara. And what is Mara actually going to pay at the 2150s? All right, well, let's take a look. Let's take a good gander at it. The 2150s, $1.40. All right, I'm losing 19 cents right off the top. So we're going to take $1.40, subtract 19 cents right off the top. What am I walking away with? I'm walking away with $1.21. $1.21. Now, it doesn't sound like a lot of money, but it's $1.21 per share. Now, if you've been following me along, you know that I like to buy in 1,000 share increments. So if I'm making a $1.21 profit and I buy 1,000 shares, that's $1,210. Yeah, Joe, I'm aware that Gallants. Okay, so Gallants, I am aware that Marathon doesn't have dividends. Now, this is one we let slide by because it was on Warren Buffett's list. So sometimes I do cut breaks on some stocks. Now remember, 3M got kicked off of the Dividend Kings list. It's no longer a Dividend King, but they've been in business for over 100 years, and before the CEO cut the dividends this year, they had 67 consecutive years of increased dividends. So I'm not going to cut the company out just because my personal opinion of the CEO and what he did. Well, he probably shouldn't have done it. All right. So if I'm walking away with 121, I'm going to divide that by 21.50 because that's the strike price I'm selling. And that's a 5.6% trade if it's all cash. If it's a margin account, you're looking at an 11% trade. So you bet your ass I'm doing this one tomorrow on Monday. All right, so I just double circled that one. How else am I supposed to set it apart? I write it down if it's a contender, if it looks good. I write down and circle it if I'm going to make the trade on it. What am I supposed to do if I want to put it at the top of the list? Put a plus sign? No, I just double circled it. Why not? What's going on here? YHVH33. Well, we're looking at dividend stocks and see if we can make a safe, predictable, consistent 1% per week, which, my friend, is over 50% per year, using nothing but pre-qualified dividend stocks. And though, hey, Joe, you like that? Interesting double circle. How else am I supposed to do it? Okay, it's definitely old school. I wrote it down. Okay, so I write it down. How do I bring it to the top of the list? It's in pen, so it's not as if I can erase it and move it up to the top of the list. I'll just double circle it. I'll come up with something. And if something beats out Marathon, well, I'll triple circle that one. It is what it is. All right. So that's Marathon. I like that one. Nice pick. All righty. So let's continue. Gavinos. Distributors, WBA. Manny, hey, can you show us Walgreens, Competition, CVS, Rite Aid? Rite Aid I'm not even going to bother with because they are so far out of the game. But I'll show you CVS because CVS is on my list also. Okay, so CVS is also one of those companies that has a store in every major city in the United States. So you have CVS, Walgreens, and Walmart for us to get our adult candy. Let's call it adult candy. Prescription drugs, adult candy, same thing. All right, so CVS is at 61.04. We're looking at the 61s. That's going for $1.09. Well, that's over 1%. Great. What's the chart tell me? Well, here's the high at 83. Here's the bottom at 52. It's currently at 61. Last year it was at 75. So all those numbers are looking good. Great. Now I want to dive in a little bit deeper. So a year ago, 75.63 topped out at 83.45 at the beginning of January. Bottomed out at the end of May, 52.84. All right. Last 30 days, the 27th. Here we go. Yeah, CVS is going to be a no this time around. Not that I don't like the stock. I do like it. Just look where the chart is. Okay, 30 days ago, we're at 58.38. She went up a little bit, pulled back, found our 30-day bottom. Actually, it's a 30-day double bottom at 55.83. Okay, July 9th. From there, she shoots up in about a week and a half to find a double top at 62.02. Okay, that was on the 17th and on the 18th. She drops to find a bottom at 57.26. Now she's to the upside. How much further do you think she's going to go? I don't think she has enough steam to go for another 5 days to the upside. Sorry, I just don't see it. Okay, she's going to stall out and turn around and come back down. When? Is that going to be Monday, Tuesday, Wednesday, or Thursday? Because one of those days, she's going to have to turn around and come back down. There's no way she's going to stay up there for 5 more days. In my humble opinion. I could always be wrong. I'm just going by what the chart is telling me. And what's the chart telling me? Well, the chart's telling me by looking at the movement. Look at the movement of the stock. Okay, since the beginning of May. Slow move up, fast move down. Slow move up, fast move down. Slow move up, this one's a slow move down. But a slow move up, fast move down, slow move to the top side. How much further is it going to go up? It's at 61 at the moment, and we have what looks like 1, 2, 3, 4, 5 days. Let me read some of these to you. All right, 61.95, 61.84, 61.87, 62.07, 61.98, 62.01, and 61.99. That's what you call some serious resistance. It does not want to seem to go past the 62 area. Okay? 1, 2, 3, 4, 5, 6, 7 times in the last month and a half. It didn't want to go past 62. Well, we know it's not worth more than 62. Hakuna, hey James, I know that the wheel strategy is not for a 9-year-old, but is that strategy better? Then you just start with selling a put and later the covered call. Hakuna, there is no thing as better. It either works or it doesn't work. Okay, now, the strategy I'm teaching here, it's simple, safe, predictable, all the kind of nice, neat, fun stuff. It's simple, okay, once you add more stuff to it. Now, can selling a cash secured put add to it? Well, yeah, I could, but you're adding another step. And you're not really changing anything. You may think by calling it a cash secured put that is anything other than, listen closely, taking a big chunk of money, putting it somewhere, and getting a return on it. Cash secured put, that's what it is. What are you doing with a covered call? You're taking a big chunk of money, you're setting it aside, and you're getting a return on it. Exact same thing. I like simple, I like safe, I like predictable, I like consistent. Now the wheel strategy works out just fine. We sell a cash secured put first. Once you own the stock, and then you sell the covered call against it. You're still getting a return on your money, no matter which way you do it. Now try explaining that to a 9-year-old. Yeah, no, it didn't work that way. That's why I don't teach it here. If I keep it simple and I teach everyone the exact same thing, you can always come back and say, "Yep, this is what I did." Do I do puts? No, I don't. I mean, I do them, but I don't do them here. Here, I like to keep it as simple as possible and as safe as possible. Because a lot of people that come here, they've never done the stock market before, or they've never seen an opportunity like this. Now, I don't know, I've never heard of anybody getting a consistent 50% per year. That's kind of like unheard of. So, I'm showing you ways to get a safe, predictable 1% per week. Great. Once you get that perfected, okay, once you get the covered call strategy perfected and you get your safe, predictable 1% per week, fine. Then add more, strategies to it. Add the wheel strategy. Add the cash secured put. Add a spread. Add a calendar spread. Add a diagonal. Add something to it. But learn the basics and the simplest, safest one first. Okay, now, when I say Hey, this is James from Dividend Stock Talk. Excuse me, brought to you by the 10-minute trader. Well, it takes me 10 minutes. The whole strategy was created for a 10-minute session from my daughter. So, all right, honey, you can squeeze out 10 minutes. Okay, as you get out of bed, go to the bathroom, brush your teeth, blah, blah, blah. Before you have your breakfast, do your trading. It take you 10 minutes. First thing you want to look at, because once you pick out your list, you never have to look at the stock market again. Because if it is on my list, I never check the numbers ever again. Because if it didn't pass all the numbers and pass all the criteria that I personally like, it wouldn't make it to my personal list. If it's on my personal list, I never check. Okay? MasterCard, no problem. Let's buy it. But is it the right time? Okay, just because they have the dividend coming up. Okay? Now, I like to buy 2 weeks before the dividend because the stock has a tendency to move up. Just because that is right, I want to make sure, am I getting my numbers? Okay, 61.04, the 61 is going for 109. Well, that's over 1%. Great, that works. So the dividend's coming up. I'm getting over my 1%. Now, what is the chart telling me? Okay, well, the last 30 days is telling me something like this. Hold on. 30 days ago, here we are. She goes up, she pulls back, makes the bottom at 55.80. Great, turns around, hits the top at 62.06. Drops back down, hits another bottom at 57, shoots back up 61. It's awfully close to that top. Does it look like it can continue going up? I have another one for you. Oh, Southwest Airlines. I like Southwest Airlines. I actually own some Southwest Airlines. Imagine that. It's looking to me. Okay, now I could be wrong. You guys got to figure this out on your own. So I don't give any advice. I'm just telling you what I'm seeing. What I'm seeing is the 30-day high was there. She drops, she turns around. Look at this, 3 days up. And that's a big day up. All right, I personally see profit taking and it pulling back. So although I like CVS, I'm going to say I'm going to pass on CVS this week. Because as it is this moment, I have a huge list of companies to look at next week. And as I know of this moment in time, crap. I can't tell what I sold. Damn it. At this moment in time, I know that I'm picking up 2 stocks in one account, 3 stocks in another, and 3 in another. So that's usually 4 or 5 stocks I'm looking at, because I will buy a certain stock in multiple accounts, because they're just different. Anyway, that being said, I'm not looking at a huge amount of stocks tomorrow. I'm looking at maybe 10 or 15, and that's it. I want to be online for 20 minutes, 30 minutes most. That's me personally. Now, when I'm teaching, it takes a little bit longer because I explain things as I go. But before I do that, let me just show you quickly how fast I breeze through the stocks. I hear you just wondering what gives you the highest returns. Yeah, Hakuna, I get you on that one, but the highest returns is not always the safest bet. All right, let's answer some more questions before we go over some samples. She'll accept seasonality, has it going down the earnings week. Manny, hey, can you show Walgreens? Yeah, I already did that one. This is straight up gambling. I'm going to disagree with you. The only reason why I'm going to disagree with you, gambling, well, that's another way of looking at it. Well, you're playing against the house. There's no safe bets. Here, there are safe bets. Hakuna, you're welcome. I literally do these same calculations at the table when splitting hands and wagers. Yeah, I get it. But there's a difference. Hold on a second. There's a difference, because I like playing blackjack too once in a while. The odds and probabilities in blackjack, okay, great. But here's the funny thing with blackjack. If I buy a stock, say I buy not Southwest. Hold on, we haven't looked at Southwest yet. If I buy a stock, I own it until I sell it. Okay, so rule number 1 is never buy something you don't want to own long term. So if I'm looking at CVS, I'm thinking to myself, well, the company's over 100 years old. They're in every major city. They're consistently profitable. The numbers are looking okay. They have weekly options. Okay, when I look at it that way, when I buy the stock, yeah, I'll own it until I decide to sell it. When you're gambling, you're done at the end of the day. Okay, you have one hand, you make that play, great, you're done and over with. You don't have any recourse. Here, if the company consistently increases its dividends for 20 years or more, and I buy it and the stock goes down, am I losing? No, I only lose if I sell for less than I paid for it. No, I'm saying LVS is not Southwest. It's Las Vegas Sands, LVS. Okay. Anyway, so as I'm saying, if the company continuously increases its dividends, right, the difference between gambling and investing is if I buy CVS, stock goes down and I just hold on to it. Well, every year they're giving me a higher and higher dividend. Dennis, sometimes you're buying stocks 10 days out and selling them 5 days, and then buying stock, blah, blah, blah. I gotta read those over again, damn it. Do your research, improve your moves, not gambling. Okay, I'm going to agree with you there. All right. Buying stock, selling on 5 days out of expiration. Can we listen to this stream as replay on YouTube later? Yes, you can. Do you upload your streams? Well, funny thing, Hakuna, the screen behind me is live on YouTube. So you can go to YouTube and watch either that one there, okay, which is me standing in front of the screen, right, and just the screen itself. So there's 2 live YouTube channels. One is just the screen, and one is me standing in front of the screen, looking basically kind of like I am now. Ready? Anyway, so the way I see gambling is you're sitting there at the table, you have to make your move, you're done and over with. Stock market, I don't consider it gambling because if the company's consistently, can you still pull up LVS? Yes, we'll take a look at LVS. What one is Southwest Airlines? Las Vegas Sands. Yeah, wow. All right, LUV. Okay, thank you. Sorry. You're right, Dennis. All right, so Sands, I'm going to say no, and here's the reason why. Before I even look at the numbers, first thing I want to do is look at the chart. Way over there, way at the high. Here's your bottom right here. This thing is still dropping, hasn't found its bottom yet. Southwest Airlines is LUV. Okay, yeah. Thanks, Adam. Okay, so I said no to this one. The reason being, take a look at the last 30 days. Okay, 30 days ago, we're at our high at 44.56. Drop down, a little retrace, drop down, and we are now at a new 30-day bottom as of Friday. So I like 2 days to the upside. So no matter what happens here, even if I do like the numbers, which I'm not even going to bother looking at, I'm not doing anything until it finds the bottom. Okay, which could be Monday, could be Tuesday, could be Wednesday, could be Thursday. So we will keep our eye on the sands at 40.85. The 40 is going for 41. Is going for, yeah, that's not even worth it, dude. Okay, so when we look at the numbers, look at 40.85. The 41 is going for 12. But if you look at the last price, 39.18. The 39.50s, well, those are going for 1%. So it's a little challenging to be able to tell this one. You got it, Adam? It's a little challenging to get this one because it's after market hours. And after market hours, you can't go by these numbers because these numbers aren't always accurate. But it does give us an idea of how to do the math. If I'm buying it here at the ask price, right? If I'm buying it there at the ask price and I'm selling it here, is that more than 1%? It's either a yes or it is a no. And it's actually basically that simple. It's a yes or a no. Derek is here. Derek, how are you? All right, Joe, you want to look at DD. That's DuPont, right? There we go. All right, so that's it for Las Vegas Sands. You know, I have to wait and see better numbers tomorrow. So Monday, Tuesday, somebody want to remind me to take a look at Las Vegas Sands. Next on the list, DD. High, low, where was it or is it? 80, 50, the 80s are going for 220, the 81s. Okay, all over 1%. Chart looks okay. Fine, let's take a look at the numbers. A year ago, we're at 77.39, bottomed out in February at 61. Look at that resistance at 82.67. It doesn't want to go past 83. 1, 2, 3, 4, 5. 5 times it wouldn't go past 83. All right. Last 30 days. Here we go. Okay, 30 days ago, we're at $80.40. I missed that. What was that? Hold on a second. I'm going to check out what that question was. The question. I'm not very good doing this YouTube one. Come on. They're not popping up. Still not coming up. Oh, there it is. I'll remind you, LVS, next week. All right, got it. Got it. Get it. Good. All right. Alrighty. 30 days ago, $80.40. We got our bottom on the 10th of July at 78.30. Okay, 78.30. A week later, we had our top, 82.55. We drop, it retraces. Now it's only one day to the upside. See that? The bottom here at 78.96. Okay, right over here. One day to the upside. Look at all this space we have to run. Alrighty. So, I like DuPont. I'm going to write that down for Monday also. Alright, so there you have it. There you have it. What does seasonality look like? What does DuPont normally do this time of year? This time of year, DuPont all right. Looks like she's going to drop and then go back up again. Yeah. Hold that thought. Oh, that was lovely. I like a good sneeze. All right, so DuPont seasonality looks like it has gone to the downside. But you can't argue with trend. Okay? So the current trend supersedes the seasonality. Seasonality is the past, what it did before. Just because it did it before is no guarantee it's going to do it again. But it's a nice guideline for us to take a look at, because there's that possibility. If it did it before, most likely to do it again. All right. Poseidon's last molar. Would you buy and hold a block of Walgreens, or do you always look for covered calls? All right, Poseidon's adventure, or Poseidon's last molar. I never hold on to anything. Okay, don't get me wrong. Walgreens is a great company. I will buy it and sell it every single week if I can collect a 1% premium on it every single week. Now, if you take a look at my trades this year, let's take a quick gander at them for those of you who haven't seen them yet. Okay, here's all my trades for this year. Now, goes all the way back to the first week of January. All right, week 1. Let's take a quick gander and see how often I actually have Macy's, because that's my favorite one this year. Macy's, week 1. Okay, there it is right there. Macy's, week 1. Week 2, Macy's. Week 3, Macy's. Week 4, Macy's. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, Macy's. Week 10, Macy's. Oh, look at that. Week 11. No Macy's, week 11. No Macy's, week 12. Week 13, no Macy's. Week 14, Macy's again. Week 15, Macy's. Week 16, Macy's. Week 17, Macy's. Week 18, Macy's. Week 19, Macy's. Week 20. Ooh, no Macy's, week 20. That's 4 weeks so far. Week 21, Macy's. Week 22, no Macy's. That's 5 weeks so far. Week 23, no Macy's. Week 24, no Macy's. Week 25, no Macy's. Week 26, no Macy's. Week 27, no Macy's. Week 28, Macy's. Week 29, Macy's. All right. So we are currently in week 30. Out of 30 weeks, 20 weeks I have bought and sold Macy's. 20 weeks out of 30. Okay, as of Monday, we're going into week 31. All right, next. ETN. Ooh. So to answer your question, Poseidon's last molar, I don't buy and hold on to anything. ETN is going to be a no. It is a monthly. I don't do monthlies. They just don't pay the same amount of money. Now, you may think that it's a monthly. You know what? It's just going to be a plain no. The numbers don't work. What do the red arrows mean? Red arrows? I don't see any red arrows. All right. More questions. Yeah, so Poseidon's last molar, I don't hold on to anything long term. Cool beans. I say that all the time too. Minty fresh. You must be from the upper northeast. UAL, American, US, oh, wait. United Airlines, UAL? UAL. Okay. So, a year ago, got high, low, blah, 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 47. The 47 is going 109. The 47.50 is 85. The 48, okay, 9. We're getting on nice numbers. A year ago, 53.44, bottomed out in late October, 33.73. Topped out 56.27, and that was the middle of May. Dennis, Rose? What the heck does Rose mean? I missed some of that. So let me go back and see what those questions were. What do the red rows? Oh, those are sell. Green is buy, red is sell. Sorry. Tony Hawk, loved you in Pro Skater. All right, everybody's got to be. Where do I get that shirt? The shirts will be available eventually on my webpage. I just haven't gotten around to it yet. Still opening it. Open heart ETN. Eaton is going to be a no. It's a monthly. Jonathan, what does it mean 25 times forward earnings? All right. Now, Jonathan, you really want to get technical. This is not the place for it. Okay, that's a technical question. I only do simple, easy stuff. Now, when I say I created this trading strategy for my 9-year-old, it had to be safe, simple, predictable. I didn't get into certain terminology. Okay, I didn't get into how the pricing is made for the options. That's the Black-Scholes pricing methods. It's a very complicated mathematical problem. Don't want to get into it. It's very complicated. I like to keep things simple. Okay, does the company consistently increase their dividends? It's a yes/no question. Okay, fine. If they do, they go into my calendar. They're into the calendar, great. What's up for consideration on Monday? Well, on Monday, we're looking at certain companies, and that's all we're looking at. Look what's having the dividends on Monday. Baxter, Delta Airlines, AGNC, Morgan Stanley, Texas Instruments, DHI, Valero, NS. What the heck is NSC? Norfolk Southern Company. Okay. Those are the only ones I want to look at. And to keep it safe and simple, I want to look at the chart. Where's the high? Where's the low? What direction is going? This one is pretty plain to see. The bottom's here, and it's moving towards the upside. Great. Is it going to do another 5 days? Because that's what we're looking for. Jumping on a Monday, getting out on Friday. So the last 30 days, here we go, right there. Okay, so the 30-day bottom is on the 11th. The 30-day top is on the on the 18th. Okay, she drops back down, shoots back up, drops back down. Now she's going to the upside. Fine. You guys have to figure out what is the best place for me to make a trade, and do I like United Airlines at this moment in time? So remember the rules. Rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. What the hell's taking so long? Come on. Rule number 3, make sure it has consistent dividend increases. I want to make sure the company's consistently profitable. 4, weekly options, because I want weekly cash flow. I'm not into this monthly crap, and I'm not into this quarterly crap, and I'm definitely not into annual percentage rate returns. Yeah, I don't do the annual thing. I want cash on a weekly basis. The only way I'm going to do that is something that has a weekly option. All right. GD wants to look at Delta Airlines. DAL. Basically the same thing. 45.96. Bottomed out at 30. Topped out at 53. We're sitting where we are at the moment. I hate it when that happens. Okay, last 60 days, she's kept on dropping and dropping. Last 30 days, what I want to see right there. Okay, 30 days ago was the 30-day high. Austin, how you doing? Jonathan Dang. Jonathan, you're getting a little bit more complicated. But hold on, I'm going to see if I can answer that question for you in a minute. So 30 days ago, we're at 48.54. Okay, she drops, finds the bottom on the 11th, 42.22. Shoots back up, hits a high at 46.88. I know it's not an extreme high, but she comes back down, and she's turning at 42.54. We got one day of the upside. I'd go for one more before I jump on in. And at 42.20, the 44.20, sorry. The 44.50s are going for 50 cents. Yeah, I could do that. That's over 1%. Well, let's write DAL down. DAL. So we got a lot to look at next week. Holy cow. Now remember, I'm only picking up like 6 stocks next week, and I get more than 20 to look at. So I'm not going to have much of a problem finding something for next week. All right, Jonathan, you want to know something about the PE ratio? I honestly couldn't give you the answer because that's not something I pay attention to. What I pay attention to is number 1, does the company increase its dividends? If they do, that means they're continuously profitable. If they stop paying dividends or they cut the dividends, well, that means they're not going to be that they weren't profitable last year. If they weren't profitable last year, why would I put my money in there? So think about it simply and logically. If the company is consistently profitable, they will consistently increase the dividends because the dividends are the investors, that's you and I, that's our share of the profits. So if they're continuously increasing the profits, more than likely they're continuously being profitable. That's one of my major concerns. That's it. Do they have weekly options? Great. My 2 major concerns right there. That's how I whittled down from that 9,590 different companies down to just 300. Are they continuously profitable? Great. Do they have weekly options where I can actually make a profit on a weekly basis? That's all I want. Then I look at the chart. 30 days ago, great. There's the top, there's the bottom. She was up, she's down, now she's going back to the upside. Great. Am I making my 1%? What are the odds and probabilities? Well, if the dividend's coming up in 2 weeks, well, that's great because the stocks have a tendency to move up before the dividend. Great. Now, if we're at a 30-day bottom or coming off of a 30 bottom, even better. Because when she gets cheap, that's when we start buying it. Because, you know, people like me and people like you looking for something to buy, something to invest their money in, they're going to look for an opportunity to make money. Well, where do you make your money in the stock market? You make it when you're buying low and you're selling high. Well, if we're at a 30-day bottom or close to a 30-day bottom and the stock is turning around and going back up, because she just got done taking some profit taking from a 30-day high. 30-day high, your profit taking drops down to a 30-day bottom. Is the seasonality chart available anywhere else besides Thinkorswim? Dennis, yes it is. Go to Google and you do a search for stock seasonality charts. Now, I like Thinkorswim because everything is right here. All right? I like the seasonality chart. I especially like the trigger trade, and it's the only trading platform that I know that has a trigger trade. I've been looking for years. Now, this is everything I'm looking for, except since old Chucky Boy took over, because Charles Schwab bought out TD Ameritrade, they changed the some of the tools, which the fundamentals aren't all there anymore. I used to be able to find book value by going over to the research and hitting the fundamentals, but it's no longer there on some of the companies. It's on some, but not all of them. It's a little frustrating. So, I'm getting tired. It's 11 o'clock. Josh, Serv. Never even heard of Serv before. S-E-R-V. Yeah, dude, come on. It's got to have some dividends and some options available. With no dividends and no options, it's not liquid. Awesome. I like that. I like it. Okay, great. 99 freaking questions, you guys. Hey, on that one, was the ROI post-investment? Manny, I don't know what you mean, which one, because I don't know which stock you're talking about. How much does it take to invest in dividends? I mean, make it worth it. All right, book budgets. All right, if you're looking to make a big fat chunk of money and retire quickly, this ain't the right place for you, dude. Seriously, it ain't. Okay, this is safe, predictable, consistent. I should probably ask boring and monotonous, because we're looking at the exact same stocks every week. I'm only looking at 300. Okay, there's over 9,500 available to look at. I'm looking at Comcast, American Express, Bristol Myers Squibb, JP Morgan, Cisco, MasterCard, AT&T, Verizon, Gap, Oracle, General Electric, Marvel. You know, companies like those. Household name companies. They're boring. They do not move that much. I'm looking to get 1%. Thank you very much. I'll see you again in 90 days. Because these stocks that we're looking at continuously pay their dividends every 90 days. So, if you have 300 companies, you're squeezing 300 companies into a one quarter. Okay, right now we're July, August, September. That's the third quarter. So you have 300 companies in those 3 months. That's about 100 companies a month, or 13 weeks. So how do you get 300 companies into 13 weeks? Well, each week has about 10 or 15 companies to look at. That's it. That's all I want to look at. Now, if I'm looking this week here at Apache, Bank Mellon, Caterpillar, Nokia, Lowe's, Costco, and Pfizer, all right? If I'm looking at this week here, I really don't care what Valero is doing, or Texas Instruments, Delta Airlines, or Baxter. I don't really care what they're doing. I don't want to look at them. It's not on my agenda. It's not on my list. Now, when I say it had to be simple, safe, and predictable, when I told my daughter, okay, we're in week number 3, great, this is all you're looking at. That and only that. Find 1 or 2 companies out of that list. If you don't find one, well, then we'll go back to our fallback list. What's our fallback list? Well, that's Ford, General Motors, AIG, Macy's, Nordstrom's, you know, the staple companies, the ones that are consistently giving over 1% a week. All the chips got hit hard this past week. Don't know what that means, but okay. All right, so Booksy budgets. Now, when you mean make it worth it, I have no idea what you mean by that. All right? Now, the reason why I'm doing it, all right, I'm 60 years old. I have X amount of dollars available. That's what I saved up throughout my working lifestyle. I've been working since I was 13, so you do the math. It's quite a while to be working, so 43 years, something like that. So, that being said, I'm looking for cash flow. Weekly income. I take my little chunk of money, I put it aside, and every week I get 1% off of that. So that 1%, okay, is enough for me to pay my bills on a monthly basis. You've got to figure out what your bills are. Does your calendar have weekly view? Yes, it does. Okay, there's the weekly view for the calendar. I don't know why you'd want to look at the weekly view. I like the monthly view. Sorry. So what was I saying? I forget what I was saying. Happens when you get older, you forget things. Oh, that's what I was saying. I was talking about getting older. So I'm 60 years old. So the money that I have set aside is enough for me to pay all my bills. Great. As soon as you figure out what your bills are and what your retirement number is, fine. That's something for you to shoot at. Now, if I'm looking at 1%, $100,000, 1% of 100,000 is $1,000 bucks. Okay? $50,000, 1% is $500 bucks. $10,000, 1% is $100 bucks. You have to figure out what is right for you and what you need in order for you to feel comfortable with this type of a strategy. If you're looking to get rich overnight, this ain't it. We're talking 1% per week. That's the goal. Not a whole hell of a lot. We're at 11:13. I have 99 questions. Holy cow. James is excited when he whips out the calculator. What do I think about Pitney Bowles? To be 100% honest with you, I've never ever traded PBI. Let's see why. PBI. Interesting. $6.74. Let's go over to here and PBI. Let's see how often they pay dividends. $0.05 in the last couple of weeks. Yeah, I'm going to say no. Take a look. All right, they go all the way back into the 70s. Holy cow. So they've been paying a dividend for quite a while. Let's take a look at the last 10 or 15 years. All right, 2004, 31 cents. 31 cents all the way up to 2006. So they don't increase consistently. 32, 33, 35, 37, 38. And then 2013 goes from 38 and they cut it in half to 19. There's a 19 for quite a while. Then 2018 they go from 19 to 5. Yeah, I'm going to say no. Sorry. I don't even want to waste my time looking at that anymore. I missed a bunch of questions. Can you repeat the Mara trade, please? Hellraiser Raisin Hell, how are you today? You want to take a look at Mara again? Let's take a quick gander at the Mara chart. All right, first off, the numbers we're looking at, 21.69. That's what I can buy it for, 21.69. The 21.50 is going for $1.40. The 22 is going for $1.29. The 22.50 is going for $1.11. This is where you're going to have to use some creative math to find out what is the best choice for you. All right. A year ago, 1654, bottomed out in October at 693. Topped out at 3409. That was back in the end of February. Last 30 days, right there. Here we go. Last 30 days. Check that out. There's Mara for you. 30 days ago, we were at 1973. We bottomed out on the 10th. Check it out on the 10th, right here. The bottom. A couple of days later, we're all the way at the top. 27.28 on the 17th. She drops, and here's the bottom on Thursday, 1993. That's the bottom. We already have one day to the upside. That's Friday. So what's going to happen on Monday? Well, Monday, we'll find out. Is she going to go higher? Is this the actual new bottom here? Or if she pulls back, well, then it's not the new bottom. Sorry, it is or it isn't. It's a 50-50 shot. We're flipping a coin, seeing what happens. But still, the 21.69, the purchase price, I could go for the 22s and still get 129 per share. 129 per share on a $21 stock. That's over 4 or 5%. Hell yeah. And if you're buying on margin, that's a fatter premium. All right, so we got a bunch more questions. Let's see if we can go through some of them. Can I do SPY? Sorry, dude, SPY is not on my list. Choose your hard. Please answer my question. All right, choose your hard. You're going to have to tell me the question is over again because I have over 99 of these things I have to take a look at. And I haven't, and yours is just not standing out like a sore thumb. See if I can find it. Choose your hard. Where's your question? Are you buying and selling covered calls? Well, I'm buying, selling covered calls. So when I say buying covered call, which means I'm buying the stock, I'm selling a call option against it. Okay, so it's kind of like a yes and a no. I'm buying the stock, I'm selling the option, and it's called a covered call. That's your answer. NERP, never heard of NERP. Dude, I've asked you a dozen times to please repeat the merit. We just did it. Okay? This is it right here. Sorry, but the questions that come in, okay, so you all right, Hellraiser, right? Now you're thinking that TikTok is right here and that those are the only questions I'm getting. Well, my dear, I get Facebook Live over here. I have Instagram Live right here. I have YouTube Live right there. And I have a second YouTube channel live right there. So I have 99 questions I haven't gotten to yet here on TikTok. Haven't gotten to anyone on Facebook or YouTube. I'm trying to do them as best I possibly can, and I do not have an administrative assistant to sift through all the different questions. When you do a covered call on Monday, are you targeting the low on the intraday chart? No, sorry, Dennis. It's all about the numbers, and it really would depend on what the numbers look like at the morning. I usually like to buy at the opening of the day. I'll go down the list of questions. Thank you, Sheila. Choose your hard. For real, I have no idea what that means. He doesn't look at the TikTok. Well, that's not true. I do look at it. It just says 99 freaking questions. I can't do them all. D&D dropped dividends 5 years ago. Are you still good with them? Not really. I mean, I don't think I've ever bought DuPont. He's doing a live somewhere else. We are just spectators. It's obvious. Makana, not necessarily so. I'm doing 5 lives simultaneously. Okay, Facebook, Instagram, TikTok, and 2 on YouTube. So yeah, I do the answers as I get them. Recon may be on Muff's left. Dennis, you got it? Thank you. Great job, did 90 minutes, blah, 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 blah. Jerry Beard, absolutely not. Recon, if dividend dropped anytime within the last 20 years, it's a huge red flag. You're absolutely right, it is. Deposit Day, what's Minty Fresh? Pretty good. I was born and raised in Maryland. Okay, that's cool. I've asked like 10 times, can you repeat trade? I came in late. All right, Hellraiser, this is like the 4th or 5th time I've seen it. Now you do realize, okay? Now when I start doing questions and whatnot, I stopped looking at the questions. I now have 99 questions to go through them all. And this is the 4th time I've seen your request to take a look at Mara. Low Card J, newbie, what do you think about the ticker BITO? Yeah, interesting. I'm not 100% happy with it this year, though, because I actually have some positions in BITO. All right, Wildcat Sam, when you started your daughter out, how much money did she start with, and how did that work? She averaged around 5% return per month, and when she started, we didn't do weekly options because I didn't understand them well. Live stuff, what about Baidu? I don't think Baidu is even on my list. B-I-D-U. Okay, it's down to 88.98. BIDU. Putting Baidu into the, what do you call it? Yeah, it has no dividends at all, so Baidu's going to be a no. Newbie here, thoughts on Bitto. All right, Bitto is an ETF. All right, D Music Star. I actually have some Dell, and I'm a little unhappy with the performance of Dell this week. But Dell, D-E-L-L, here we go. It's at 113.56. The 113 is going for 310. The 114 is 260. The 115 is 215. They're all over, well over 1%. Let's take a look at the numbers, though. A year ago, we're at 52. Okay? Then on 5/29, the end of May, we're at 179. So it goes from 152 to 179. That's like triple price. Well, of course, there's going to be profit taken, and there was at 113. Okay, so the last 30 days, where are we? Right here. Take a look, the last 30 days. 30 days ago, we were at 137.83. Okay, a week and a half later, we got a 30-day high at 150.23. Right here, so here's the high. And she drops. Thursday was the bottom, right there. Thursday's your 30-day bottom at, what was it? 110.33. We're sitting at 113. Well, great. Here's your 30-day bottom right there. When I say buy low, sell high, ooh, what was that? All my TOS paper covered calls, blah, blah, blah. I didn't get to read that one. All my TOS covered calls expired Friday. Will everything clear by Monday? Yep. If everything sold on Friday, Monday, you're going to be 100% cash trying to figure out what the hell am I going to do with all this money? That's my favorite. My absolute favorite position to be in is when everything sells on a Friday and I'm all back 100% cash on Monday. So that's a good position for you to be in. So let's take a look at some of these more questions. Say, I like Dell. I'm going to write Dell down for Monday because I already have some of it. So Dell's going to look good for next week. What else we have for more questions here? We're past almost 11:30. All right. Recon. It's not really for this program, but he has bought it. But not sure if it worked out. That must be talking about Bitto. How do you decide what stocks you're invested in? Love it. Thanks, Dennis. Do you look at financial statements? Yes, I do. Flacco. How do I decide? Well, here you go. You ready? I look at the consistency of the dividend increases. How consistent are they with increasing their dividends? What does that mean? Well, if a company is profitable, it shares its profits with their investors. That's the companies that I invest in. They pay out dividends. They share their profits. There are some companies that don't share the profits. Okay. Oh my goodness. Tesla is one. They don't share profits. I'm trying to think of the other one right off the top of my head. It's a relatively big company too. The richest man in the world. Bezos owns it. What is that one? Amazon. Amazon doesn't share dividends either. So if they don't have dividends, if they're not sharing their profits, I don't want to take a look at them. So we're talking about the dividend kings. 50 years of increased dividends. We're talking about the dividend champions. 25 years of increased dividends. We're talking about the dividend aristocrats. Again, 25 years of increased dividends. We're talking about the dividend contenders. 10 to 24 years of increased dividends. And then, of course, I like to throw in Warren Buffett's list. Between those 5 lists right there that I just gave you, the kings, the aristocrats, the champions, the contenders, and Warren Buffett's list, those 5 lists right there will give you over 300 companies that consistently, year after year after year after year after year, consistently increase their dividends to their shareholders. Those are the only ones I want to look at. And they got to have weekly options because I want weekly cash flow. All right, so let's take a look at more questions. Do I look at the financial statements? Flacco, yes, I do. Before any company is going to get onto my calendar, this is my personal calendar. Let's get out of here for a second. Okay, now you see all those dots there? You're seeing one dot here on the 3rd, 70 companies, right there, 70 companies. Here, 39 companies on the 10th. The 17th, 42. Right down here, what date is this? The 1st, 36. Oh, look at this one. The 14th of June, 154 companies. Right here, look, 154 companies paying out dividends. The 7th, 57 companies. The 31st, 120. This is just 1 month. Now remember, there's 3 months and a quarter. Okay, that's the month of June. Here's the month of July. There's the month of August. There's the month of August. Look, 33, 50, 48, 67, 35, 49, 53, 37, 134, 78, 71. That's an awful lot of companies paying out dividends. How do I figure out which ones I want? I figure out the ones I want because they consistently increase their dividends. Most of these aren't on my list. My personal list is right here. It is one of my personal lists right there. Most of these companies are over 100 years old. All right. Do you look at the financial statements? Yes, I do. Millionaire Money Coach. Thoughts covered on covered call ETs. I have no idea what an ETs is. What is your compare and contrast when it comes to researching new companies? Flacco, I don't do new companies. Sorry, they got to have 20 years of increased dividends to make it to my list. Sorry, I got 300 companies I'm looking at. If I want to add 301, it's got to be a company that has consistently increased its dividends. And for that, I go to the dividend contenders list. Because the dividend contenders list has every company that has 10 years to 24 years of increased dividends. You're a really good teacher. Wish I would have found you sooner. Hey, Searles family, how are you? Locar Jr., where can I find your list? Cisco, your thoughts? I've been interested in them because they're expanding. All right, Flacco, you're going to have to ask me tomorrow because we're past 11:30 and I still got a bunch of questions to go through. Manny, I'm asking about $1 profit. One earlier, you said $1, 10% gain, but out. Oh, okay, so you're talking about that company I was talking about when the $1 was a 10% increase. All right, so if you have a $10 stock, okay, I think it was, wasn't it Walgreens? I think it was Walgreens. Hold on a second, let's pull up Walgreens to see if that was the one. WBA. Yeah. All right, so Walgreens has bottom at 1072. That's the, wait, was that the bottom? Here's the bottom on the 9th. Okay, 1069. All right, here's 1069 right there. When that stock moves up $1, that's a 10% move. Because a $10 stock, $1 on a $10 stock is a 10% move. Okay? So the bottom was 1069. It's at 1182. It went up over 10% from the bottom. That's what I think I was talking about at that moment in time. Manny, of that dollar, what's the true profit of post-investment? Well, now that's an interesting way of looking at it. Now, if I bought the stock, hold on a second, let's take a look. WBA. All right, so if we're buying WBA right now, I can't go back and take a look at what already happened. I can only look at what's happening forward. So at this moment in time, Walgreens is going for $11.83 per share, right up there. See it, $11.83 per share. The closest strike price is going to be the 12 strike price. And that is going for 18 cents a share. Now, Manny, you have to remember, what is it you're looking to get? I'm not looking for the capital appreciation on the stock movement. I honestly could care less about the stock movement. I just want to make sure it's in an upward trend when I jump into it. Because if I like Walgreens at this moment, and I do, I would buy it at the market price at the open, $11.83. I would sell the rights through a covered call for someone to buy it from me. And the closest one is going to be the $12 strike price. And that premium is 18 cents. So if you take the 18 cents, clear that, 0.18, and you divide it by the purchase price, 11.83, and you come to a grand total of 1.52%. So that's 1.5% for the week, provided it stays above 12 bucks. Okay, so you really got to understand what you're coming in at, what you're leaving at. When I say if a stock moves up a buck on a $10 stock, well, that's a 10% move. Okay, a $20 stock, $2 to the upside would be a 10% move. Manny, I think it was American Airlines, but it might have been incorrect at this point. I'm also getting sleepy. Yeah, me too. Uh-oh. I missed some questions. I asked about that. Yep, I got that. Okay. All right. Also, I'm in ALL now also. That's American Airlines. Were we talking about American Airlines? We were. Okay, so American Airlines. The bottom, right here, 27th. Okay, just about 30 days ago was the 30-day high. Oh, hold on a second. Hold on a minute. Before we go much further, give me a dime so I can call my mother. I remember that song. Okay. Now, as I was saying with American Airlines, 30 days ago, we had a high at 11.41. The bottom was Thursday, and the bottom happened to be 9.74. Now, from 9.74 bottom to where it is now, the top was 9.76. That's a dollar move. So depending on where you got in, if you got in at the bottom at 9.74, and you sold at the top at 10.76, that's a $1 profit. A $1 profit on a $10 stock is a 10% profit. Okay? Manny, I was asking about the gain. I understand what you're talking about, the gain. The gain is whatever your profit is after you buy and sell and clear out and walk away. I'm not looking to buy the stock here and sell it here and getting that $1 profit. No, that's not what I'm looking for at all. I'm looking at the stock waiting for it to move. Well, here's the 30-day top over here. Here's your 30-day bottom. Great. 2 days to the upside. Wonderful. So if I'm jumping in here at 10.62, selling off to 10.50s, this is what my profit's going to be, 28 cents a share. 28 cents a share is over 2%. That's what I'm looking for. Hollywood's here. What stock is on the screen? American Airlines. Okay. All right. Sheila, Intel. Really? Intel, INTC. INTC. Okay, highs there, lows there, here we are, blah, 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 yada, 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 31.38, the 31.50s, 125, well over 1%. Let's take a look at the numbers, the 27th. Here we go. 30 days ago today, we opened up at 30.75, bottomed out on the 2nd of July, right over here. She goes up, she pulls back, 30-day bottom right there. She tops out at 37.24. Bottoms out on Thursday at 30.95. We're sitting at 31.35. The 31s are going for $1.50. I like that. So I'm going to put Intel down at $1.50. INTC. I like that one. So let's keep going for some of these questions. Been slowly picking up when? Yeah. Who did you learn trading from? Yeah, it was called the School of Hard Knocks, brother. Okay, I've been doing this for over 20 years. I've made more money in one day than most people make in a month. I've lost more money in a week than most people make in a year. Very uncomfortable. Okay, I've paid my dues. Annie. Welcome to the show, Miss Annie. Sheila, earnings, 8-1. Sheila, Wildcat. Wilder, those earnings were a killer for me last week. Yeah. Walmart. Oh, I like Walmart. Amazon. I don't like Amazon 86 only because they don't share their dividends. Is it cool beans you say I must be from the Northeast? I said I'm from Maryland. Well, if you take a look at the United States, the Northeast is what? I don't know. Maryland, Delaware, Connecticut, blah, 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 the area. Anyway, cool beans is one of those terms used up in the Northeast. Sheila, oh yes, I have INTC, kind of nervous. Okay. Any favorite stocks you repeat and buy again? Well, all of them. Okay, so Steve, you're relatively new here. What I do is I take a certain set of stocks, specifically those companies that have consistently increased their dividends for more than 20 consecutive years. There's only about 300 of them. Those are the only ones I trade, and I trade them over and over and over again, specifically when they're getting ready to pay their dividend every 90 days. Okay, it's like a revolving door or a merry-go-round. Okay? Say, as it goes around and around and around and around, think of it, 90 days. Now, there it is. Now, there it is. Now, there it is. Now, every 90 days, same stocks over and over again. Jay Hernandez. Good evening, James. How are you feeling about next week? Who are you picking? Well, we'll talk more about that tomorrow night. Good night and thank you. Be back tomorrow. Sir's family, we'll catch you tomorrow. I just downloaded Thinkorswim set to set it up and play with it. Wildcats, Sam, way to go. Look at that. That's all the questions. I'm caught up with my questions. Woohoo! Alrighty. You have to have a brokerage firm. There are many. Yeah, if you're working with Thinkorswim, the brokerage firm would be Charles Schwab, if you like them. Lamb Chop, thank you. You're welcome. Invite Crypto Gunner. Yeah, I don't do cryptocurrency. E-Trade, Charles Schwab, Fidelity. Yeah, unfortunately with Thinkorswim, you actually got to use Charles Schwab. I've never done Fidelity. I looked at E-Trade many, many, many years ago. I didn't like the layout. Not to say that Thinkorswim's any easier. I mean, once you understand what you're looking at, how you get rid of some of the crap that you're never, ever, ever going to use, yeah, it's a little easier. All right, so we're past 11:30. We're going to call it a night. You guys have a great night. Tomorrow we're going to do the exact same thing. I'm pretty much sure that tomorrow night's going to be a lot like tonight. Thank you so much. Minty Fresh, have a lovely day. Minty Fresh, you haven't had anything to say lately. I don't know. Geraldo, awesome, thanks. Mr. Hernandez, good night. Good times, yes. Good times, how did that go? Hey. What's happening? Have a good night, Lamb Chops. Al, good night. All right, over here on Facebook, have a nice night over here, Elmar. All right, that one's done. Jen Pinka, thanks, you're welcome. All right, we're done with that one. Okay, put that there, that there, that there, that there. All righty. All right, you guys on Instagram, have a great night. And now on Instagram. And now on TikTok. Good night. Okay, you guys on YouTube. Thanks, Dennis.